Today is Monday, May 22nd, and this is the ADM Investor Services weekly market kickoff. Today's guests are Alan Bush, Senior Financial Economist here at ADMIS, and Steve Freed, Vice President of Grain Research. Alan, last week the British pound jumped above $1.30 for the first time since September 2016. How can the pound be so strong when many predicted Brexit would be a disaster for the UK economy?
Well, apparently the Brexit is not the disaster that so many analysts had predicted. The UK economy is doing very well, and in fact it's doing so well that they are probably going to be able to be in a position to raise their interest rates in 2019. So higher rates would normally suggest a stronger currency, so I would look for the pound to continue to gain against the US dollar.
There is an interesting triple top pattern in the June Dow futures at the 21,000 area. Will this area of resistance hold?
No. In fact, the reason why is there's an old adage, basically it says that double tops seldom hold and triple tops never hold. I have to put the never in quotes, of course there's always the exception. So most likely with that triple top being as obvious as it is, I would think that anyone that is short may have some buy stops building above that area. But in any event, the fundamentals remain bullish for stock index futures, so this triple top will not hold. I think we'll take it out within the next month or so, and we'll see continued gains.
What is the longer term outlook for stock index futures in light of the renewed political uncertainties in Washington?
Okay, well, the political uncertainties tend to have their ups and downs as far as the impact on stock index futures. That is not the dominant fundamental to focus on. The dominant fundamental is the interest rate situation and the interest rate outlook. Interest rates are still low enough domestically and globally to continue to support stock index futures, I would say all this year. So in keeping with my answer for that last question, I would look for higher prices across the board. Not just the Dow, but all of the major indices will continue to advance, and this strength should continue at least for the balance of this year.
Steve, last week the soybean market broke hard on news that the Brazil president might resign under rumors of a scandal. What is happening now, and what is the wheat impact having on the soybean market?
Well, first of all, I think that over the weekend, the Brazil Supreme Court voted for the lower house of their Congress to start impeachment proceedings. And so they could start as early as this week. Last week the Brazil currency broke on this news, and the farmers were aggressive sellers, and now it looks like they're waiting to see how bad is bad, but they probably will increase their selling, and it's been weighing on the soybean futures market, and I think it probably could continue to offer resistance if more negative news comes out of Brazil.
It remains wet and cold across the U.S. Midwest. What impact is that having on the corn and wheat market?
Well, it's not as bullish as if it was hot and dry, but it is slowing the last, let's say, 10 or 15% of the corn plantings. We could lose some acres in the wettest areas across the southern part of the Midwest, and that could shift to soybeans. As far as wheat is concerned, it probably isn't affecting production, but it could affect quality. And it could be the second year in a row in which we could see some kind of quality issues. So at least corn and wheat, they're staying in a very narrow trading range, and it's hard to break out of that range because we've got too much supply and we have too record demand. In the beans, we took out some pretty important support, and now we're trying to get back into the trading range that it had established prior to the Brazilian news.
World demand is at a record. Can that support prices despite record supplies?
You know, I think that in corn and wheat it could, because we're talking about the potential here in the United States of lower crops. And so the demand, as it continues to go up, could be supported. The problem in those markets is that if the Northern Hemisphere has normal crops, we're going to see our export demand drop. So the drop in export demand could offset the lower supply unless we have a summer weather problem. So it kind of keeps us in that trading range. For beans, we just continue to underestimate China demand and their protein demand, and that continues to offer support. So every year, it seems like both the United States, Brazil and Argentina has to have record crops to satisfy this demand or prices go higher. So in the case of soybeans, it could provide some underlying support. When people thought we were needed to go to like 850 beans, we may not trade much below 950 because of the demand.
Please remember that the opinions expressed here today are solely the opinions of our guests and are not necessarily the opinions of ADM Investor Services or Archer Daniels Midland Company. If you have any questions or comments or would like to know more about our services, please contact us at www.admis.com.